right. Hey, everybody. Welcome to the outside stage. Thanks for being here. We're the last session before lunch, which is a good spot, so we're going to have a fun time with this one. We're going to bring a little bit of spice to the regulatory conversation. People think regulatory is boring, but actually it's one of the more interesting stories to cover in crypto, and I think especially now. This moment is really fascinating. So, hey, I'm Zack, Seward. I'm joined by some great guests. We're going to do sort of a globe-trotting tour of the crypto regulatory landscape. But first, let's get some intros. Carole, tell us about yourself. What are you doing?
Great. I'm Carole House. Most people know me from when I was a regulator covering crypto at FinCEN, the U.S. anti-money laundering regulator, and then also at the White House working on President Biden's executive order on digital assets. But now I'm over at Terranet Ventures, where we're investing in security technologies and advising and consulting on digital assets and cybersecurity.
Emily?
Hi, I'm Emily Parker, Executive Director of Global Content at CoinDesk. But before CoinDesk, a long time ago, I was at the State Department in the policy planning staff, advising on internet freedom and technology. And I've spent actually most of my career in Asia, specifically in China and Japan.
All right, so we're in Korea, and I think we should start this conversation in Asia. Obviously, there's a lot of excitement around crypto in Asia. A lot of headlines, obviously, a lot of doom and gloom in the US. But I think certainly among some of the bigger capitals in Asia, there's a race to really embrace this industry. Potentially, they see opportunity where people in the US see red flags. So, Emily, before we get going, I kind of wanted just you to sort of provide a high-level overview of the key players, namely, Hong Kong, Korea, Japan, maybe even Singapore. Just break down what they're doing and how their approaches are different.
Sure. So, and Carole, I'd love to hear your thoughts on this as well. I think it's fair to say that Asia is poised to be the center of crypto. I mean, I think this is the region where it's the most dynamic in crypto, and I think especially compared to the United States. Let's just start with Korea for a moment for obvious reasons since we're here. Korea, I think, is probably one of the most undercovered and least understood crypto powers, at least in the English language media, because Korea is so important, especially if you look at the retail market. You look at Upbit, for example. I believe Upbit just became the second largest exchange in the world. Korea just has massive retail power in crypto. So I think it's something that is not as understood. Once in a while, you'll see, for example, a token just spike kind of inexplicably, and then you look and you realize it's because of Korean retail traders. So just to sort of start with that. But Japan and Hong Kong are also becoming increasingly talked about. Japan is becoming actually kind of a leader in global crypto regulation. For example, Japan just passed a stablecoin law. The US has not managed to do this. The US is still fighting about stablecoins. Japan actually passed a law. Hong Kong just unveiled a licensing regime for crypto exchanges. But I think what's most important about Hong Kong and Japan, again, compared to the US, is that they're sending a welcoming signal to the crypto industry. They're basically saying, we're open for business. And I think that's very different from some of the messages that we're getting from Washington. And of course, obviously, Singapore has been a player for a long time. China, even though crypto trading is heavily restricted, there's still a lot of Chinese trade. This is a critically important region for crypto.
All right, so Carole, let's get to the critical question. Like, why is Gary Gensler being such a punk when it comes to crypto? What is animating this this recent sort of barrage of attacks and enforcement actions against the big players in the space?
Well, first I'll underscore a key theme, I think, really from Emily's comments, which is that all the countries that you mentioned that are absolutely economic and technology powerhouses in Web3 and cryptocurrency are also nations that have been regulating the cryptocurrency ecosystem. So I actually think that the US has been a powerhouse nation driving a lot of innovation in this space. So first I'll say that generally the regulatory framework is one that's been in place for a long time. A lot of the critiques that come towards the U.S. framework are driven by enforcement actions that people think are new and generated because of a specific vitriol towards crypto across the whole U.S. government. First, I'll say that enforcement actions actually take many years to come to fruition. So a lot of this effort that's that you're seeing now culminate inside of enforcement actions is because of something that's been a priority for many years, and the fact that the U.S. regulatory framework has been in place for a long time for securities, commodities, and anti-money laundering for all of these companies. But I do hear you on the fact that industry and others have been calling for clarity, that the SEC, for the most part, has stated the clarity that we're going to provide has been provided. So then we're bringing these enforcement actions. I do think that there are opportunities for looking at other nations' approaches, like, for example, MiCA and the MiCA framework in the EU that really provides a clear pathway to registration, which has not been answered in a call in the US. But I do think that the US government on the whole, so not looking at independent regulators and Gary Gensler and the SEC, but on the whole, you have an administration that's trying to drive competitiveness in the technology. We have a framework driven by commerce. We have the most comprehensive framework in place for anti-money laundering. So there are a lot of building blocks for creating a good framework in the U.S.
Nice. The MiCA shout out, we definitely want to talk about that a little bit, but I want to zoom in on a comment that you made, this multi-year sort of consideration, right? And I think this November will be the 1-year anniversary of the famous FTX implosion that seemed to sort of catalyze or at least accelerate a lot of the efforts in the U.S. So you're saying that this is a more reasoned approach that isn't necessarily reactive to some of those major implosions.
I definitely think that most of the enforcement actions that you're seeing are things that have been underway since long before a lot of the major implosions. But we've seen massive and pervasive fraud, market manipulation, and illicit finance in crypto for many years, as well as lots of really good actors. Part of how you reward good actors is by holding accountable the bad ones so that the good ones can continue to flourish and the bad ones get weeded out and consumers will build trust in the ecosystem. But I do think that it's fair that there are some folks on the Hill and otherwise that had built some closeness to certain players in the ecosystem. So with some embarrassment that you're seeing across some of the political ecosystem, there are some folks that, especially I think in political circles like in Congress, that really now have a particular agenda related to crypto.
Yeah, just to respond to a couple things, I agree with everything you said. I think it's an important point, too, that it's true. The U.S. government response is not monolithic, which is important. Like, it's not like everybody in the U.S. government agrees. But this is also part of the confusion, right? And this is where some places like Hong Kong and Japan have an advantage, because in the U.S., you have so many chefs in the kitchen, right? There's just like so many different people regulating crypto and who have opinions on crypto. In Japan, it's the FSA, and so like it's kind of a little bit simpler. Or in Singapore, it's MAS. Like, you have one sole regulator. Also, for the FTX thing, I think this is another important point, is that part of it, as Carole just said, were like the political donations and the fact that Sam became this kind of like unofficial representative of crypto in Washington, right? But the other problem is that, the U.S. didn't really have regulatory safeguards in place. Again, this is another really stark comparison to Japan. Japan was one of the only countries where FTX Japan users got their money back because they had a regulatory framework that protected investors, specifically separating customer assets from corporate assets. So when FTX blew up, Japan was very calm because FTX Japan users were able to get their money back thanks to regulation. So the U.S. doesn't have that kind of national segregation of assets framework that Japan had.
Yeah, I really love the Japanese framework, and that they were lead voices in passing the anti-money laundering standards. I really do think that the Asia-Pacific whole region has been a powerhouse driver here. And you're right that people talk about how fragmented the crypto regulatory framework is in the US. So it is fragmented, but only exactly as fragmented as TradFi is also regulated in the US. So there's pros and cons to that issue, but at least we've been taking an activity-based approach for a long time. But I agree that clarity and imposing that obligation and the critical controls that you just pointed to are what's needed to be able to protect consumers.
I want to zoom out even a little bit further, actually, because I think we have this conversation often with kind of glossing over what's at stake. And I think especially as it relates to conversations with policymakers, regulators, people who are trying to figure out this technology. Carole and then Emily, when you're talking to these folks, how are you communicating sort of the pro-social value of what crypto and blockchain technology enables, and what's resonating and what is just falling on deaf ears? I'll start with Carole.
Yeah, that's fair. And when you said what's at stake, I thought you were making a pun. So if it was pun intended, I like that.
Proof of stake?
I was. Anyway, I thought it was a
Nice.
proof of stake joke. But I I think that what's at stake for taking an overly harsh framework and approach, like Emily is warning against in the US, is taking one that does stifle critical innovation that can provide some of the foundational building blocks for the future of smart cities. Like I see a lot of great potential for things like digital identity and supply chain transparency. Like blockchain was made for auditability and data integrity. So while there are some voices that want to, that all that they see is pervasive fraud and market manipulation and absence of consumer protections being implemented at scale, so then they feel that that is a fault of the technology. That is not a fault of the tech. That is a fault of people and businesses. So those are the controls that we need to put in place when what's happening is financial, and also recognizing that a lot of the activity that's occurring is not financial and should be treated similarly to how we treat internet infrastructure. So basically, I think that that was certainly a message that I fought hard to communicate inside of the administration. There's still messaging that I'm doing with that, and others are as well inside of Washington. I think the real issue is when you look at arguments for things like financial inclusion, right? Like that is kind of an obvious benefit that democratized and decentralized systems should be able to bring. The issue that I see from progressives is that they see, well, inclusion in a system that doesn't have critical protections and mechanisms for victims to, be able to get their information or their financial assets back when they've been stolen. That is not, in fact, a financial inclusion outcome. When it's inclusion in a system that doesn't have critical protections. Of course, you can create those protections. So again, it's not a fault of the tech, it's a fault of businesses and people, and that's who we need to be holding accountable.
Yeah, Zach, I love that question. It's such a good question. So yeah, like how do you, this is kind of the core problem, right? Like how do you communicate to governments, specifically in the US, that crypto is important? Because I think there are people in Washington who are totally fine with it leaving the US. Not everybody, but at least some, right? So, and again, you look at like Hong Kong, like I think Hong Kong regulators and government clearly see crypto as a source of economic opportunity, like bringing business and investment to Hong Kong. So they see it, they see the risk, but they also see the opportunity. In the US, I think there's definitely people who see more of a risk. I think there's, I think everything you said, those are all really good arguments. I would just sort of add, there's an additional problem here, though, that's probably kind of a crypto industry problem, which is that the use cases are still not clear enough. This is just like a fundamental problem. Like, I feel like if more people in Washington and more mainstream just people in general saw why crypto was necessary and why they need it, we wouldn't be having to explain it all the time, right? And I think you just look at the ChatGPT, for example, right? Like ChatGPT appeared and everybody just knew how to use it and everybody saw its use value immediately. You didn't have to explain like how it works and create explainer videos about what the technology was, right? Like people just got it. So crypto's like not totally there yet, and that's a little bit part of the problem, is that like I think more people just need to see it as like fundamentally useful, and then I think we'd have to explain it a little bit less.
I really love those comments, incisive as always, Emily. And I also wanted to foot stomp your mentioning the national security issue. Since I was on the National Security Council, that's really a core one in the U.S. that I still find frustrating for those who want to drive this technology overseas or don't care when it goes elsewhere, because ultimately driving the activity outside of the reach of our sanctions policy, and also driving things like U.S. competitiveness, all the economic benefits that you get from being a powerhouse for it is, it's a huge cost, and that's definitely at stake for an overly burdensome approach in the U.S.
Actually, just to add one thing, because I forgot, yeah, totally, the national security thing, because I think, like, right, if you have people in Washington who fundamentally just see crypto as, like, scammy, right, it's going to be hard to convince them, like, we really need this, and this is good for the U.S. But I think the argument that you just made about national security may be more likely to resonate, and I think, like, another part of that argument is about U.S. investor protection, and that argument is basically that crypto is not going anywhere, it's here, and if you just chase it outside of the U.S., it doesn't mean that U.S. investors won't find ways to access it, it just means they're going to go to offshore exchanges that do not protect U.S. investors. And I feel like that argument might get a little bit more traction, because it's like, if the SEC is really serious about U.S. investor protection, there should be frameworks in place that actually protect U.S. investors and don't send them all to Binance or FTX or whatever.
Let's fly over to Europe, shall we? Let's talk about MiCA. You mentioned it. That passed early this year and was seen, I think, largely by the industry as a positive step forward for, again, establishing those clear guidelines that businesses love to have in place. They focused, again, on sort of the centralized intermediary layer, the stuff that kind of comports with existing frameworks for regulating this stuff. And they kind of punted on the DeFi stuff, the on-chain stuff that doesn't fit as nicely in that box. So I wanted to ask you, Carole, about that approach, your general views on MiCA, and also the prospects for some of the more on-chain related things that are still to come as it relates to that suite of regulations.
Yeah, thank you. The MiCA framework is something I'm very excited about, certainly, because anything that involves the rest of the world implementing proper frameworks to regulate financial activity, we need that. When this technology inherently operates cross-border, these transfers are moving from companies that are headquartered in one location, have operations located elsewhere, and users in another jurisdiction. We need international regulatory frameworks to be put in place because the U.S. playing global police on this is not benefiting the U.S. It's also not benefiting the ecosystem when we're not scaling proper early and often enforcement. I know enforcement is not everyone's favorite term in this space, but I actually think that the way to be sector shaping and not sector breaking is by early and often and smaller, more iterative enforcement actions to help shape a sector into the right bounds with the right controls, rather than waiting until they're huge and you're citing activity from 5 years ago saying, well, that business operation that you've been doing for 6 years actually is not working or protecting consumers. So I think it's critical. I know that the US framework is often criticized in relation to MiCA. To a certain extent, I think that a lot of MiCA is actually just getting Europe to where the US has been in imposing certain requirements for those who deal in commodities, securities, and money transmission that have been regulated in the US for a long time. Since at least 2011, they've been regulated. The benefits, though, that MiCA really gets right, it puts in place those prudential standards, like Emily mentioned earlier, related to stablecoins that are so critical, and it creates a very clear pathway to registration, something that the U.S. has not gotten right in capital markets activities. So I'm excited for that related to MiCA. As you mentioned, it focuses on more CFI or CDFI. I know in this audience, really DeFi is really talking about applications that don't have much centralization at all. But I will say that in the context of many regulators and TradFi, all of you are DeFi, Coinbase is DeFi. So understanding that DeFi and centralization is a spectrum. It's not a 0 or a 1. It operates somewhere across a whole spectrum of operations and different levels of centralization in technology and economic activity. MiCA has not attempted to go after that, which is fair. It's appropriate in a risk-based approach to focus on CFI. Most activity, most financial activity is going through application layer, centralized exchanges. So I think that that's the right approach for a risk-based strategy. However, there's a lot that needs to be done on DeFi as more and more activity gets used in the decentralized ecosystem. We're seeing that in illicit finance. Reports published by blockchain analytics firms have highlighted the greater use of privacy wallets and DeFi applications for the destination of illicit proceeds. As the risk evolves, then so do the regulatory frameworks to be able to cover decentralized activity.
Yeah, so you have sort of Europe vis-a-vis the US, but also Europe vis-a-vis Asia. Do you have perspective, Emily, on where Europe fits into the picture, given, again, some more progress on the regulatory front in recent months?
So I'd say that Europe Japan is ahead of Europe, actually. I mean, just in terms of, actually passing a stablecoin law. But yeah, I mean, I think that, we're going to see increased, I don't know if I'd say competition, but increased appeal of the, Hong Kong, Japan, and Europe. I guess the one thing that I would just highlight that's really all these places have in common is that they're actually incredibly strict, right? I think when people talk about crypto friendly, that does not mean at all that it's easy to do business in these jurisdictions. So I feel like that's really important to underscore. MiCA, Hong Kong, Japan, these are really, really strict jurisdictions. And in fact, some of the criticism of these jurisdictions is that it actually could be difficult to do business there, or difficult for an exchange to be profitable there. And I think Europe in some areas is uniquely strict, in some areas Hong Kong is uniquely strict, some areas Japan is uniquely strict. So I think that's just a really important thing. When we say crypto friendly, it does not mean you can just go there and do whatever you want. So
yeah, so I guess the question also in the background here is the looming prospect of CBDCs, right? So various countries are trying to figure out how to regulate private stablecoins issued by players like Circle, Tether, etc. And then in the background, you have sort of the prospect of central bank digital currencies. Obviously in China, that's probably where it's most advanced. You see a lot of conversation in the US around a digital dollar, and a lot of that conversation is pretty basic right now. How does this CBDC conversation loom over this or inflect the conversations that we're having as it relates to regulating more traditional crypto assets? Carole, I'll toss that to you first.
Great, and I appreciate you bringing this up because it was such a critical issue, certainly for the administration. In the executive order from the president, President Biden told the Fed that it is with utmost urgency a priority that the U.S. government needs to do research and development related to a U.S. central bank digital currency, and also an assessment to determine whether or not it's in our national interest. That's important because right now in the United States, there is a lot of misunderstanding and conflation of issues around CBDCs that's going on. We have people thinking that, oh, well, the administration only wants a CBDC and wants to ban and prohibit stablecoins and crypto and wants to use this as a state surveillance tool and wants to, I think even Rep. Emmer has stated, wants to out-China China and implement a framework like the ECNY. I don't believe that's an accurate understanding of the U.S. framework at all. It is not at all a given that the U.S. will issue a CBDC, and certainly not a retail CBDC. I can't even convince Americans that a national physical ID card is a good idea. I truly don't know in the U.S., given the political ecosystem, how to convince Americans to use a digital dollar and convince them that there isn't a government backdoor built into it, even if I can technologically prove it. There's just a kind of trust and marketing that will have to be done. But that's why there needs to be research and development around it. And ultimately, the population may change on thinking around that. And wholesale is definitely ripe for experimentation. There's a lot of work being done and driven by a lot of Asia-Pacific nations, actually, related to CBDC experiments that are going on in the BIS Innovation Hub and also some bilateral partnerships that are occurring. So in the US, there's some experimentation that's happening. Unfortunately, there's this polarization on the Hill, especially across both parties that I'm seeing, where on one extreme side, you have some people who have forgotten that industry is who drives innovation and thinks Americans will open up an account with their friendly neighborhood central bank. And then on the other side, people think the government shouldn't do money, CBDCs are evil and will be used for unlawful surveillance, and don't have faith in our structures of government and our elected officials, and also think that poor regulatory frameworks without necessary controls are what's needed, and that we can trust giant corporations that have not always been able to be trusted so far in use of customer data as well as management of their assets. So those are extreme views. There's many in the middle. Again, it's a spectrum, but basically, the CBDC conversation is not one that has a lot of nuance to it at the moment, except in some think tank discussions and others. So we need brilliant developers to come help the government figure out how to build it in the U.S.
Whoa, Carole. You're saying the Joe Rogan, Post Malone conversation about CBDCs was lacking nuance? Come on, dude.
Thank you for sending me that video. I had missed it until you mentioned it.
Good video. Anyway, check that out. Some good discourse. Anyway, Emily, I think especially in China, the CBDCs versus an outright crypto ban is a really interesting sort of dynamic. Curious for your thoughts on that.
Yeah, so I feel like, not to state the obvious, but China and the US are very different countries that have very different systems of government. So I think this idea that a US CBDC would look exactly like a Chinese CBDC does not seem very realistic to me. Carole used the words lacking nuance. That's very diplomatic. I would say that the conversation of the US, it's I don't even know how to describe it, because basically it's CBDCs, even though they are nowhere near happening, right? It's basically risen to the level of a presidential election issue where you have presidential candidates talking about banning them. Now, on the one hand, I think it's good that people are really worked up about privacy, because obviously there are privacy concerns with CBDCs, and if the US were ever to consider it, privacy would have to be first and foremost. But I also think, yes, the way that CBDCs are being portrayed are probably very unlikely to exist in the United States, this sort of idea that the government will know every time you buy a cup of coffee and it will be the only form of money. And I don't really think that's in the cards. So it's not a particularly nuanced conversation in the United States.
How did that become a presidential talking point? You have Ron DeSantis saying, I'm banning CBDCs. Again, this is a very prospective development that this happens in the U.S. Does anyone on stage have opinions for how this has become such a hot button issue?
Because it fits, in my opinion, I'd love to hear yours, but I just think it fits into a lot of campaign rhetoric. The first one is fear of China, right? So it's just a really easy kind of okay, we don't want to become like China, so that just fits in really nicely. And also just kind of anti-Fed sentiment. There's just a lot of negativity towards sort of the Federal Reserve, so it's the Fed is going to control everything. And then, so I think those two things in particular are just kind of fit very nicely into sort of campaign rhetoric for some candidates.
Yeah, I think that that's an accurate backdrop, and really just it's an exacerbation of these issues that we're seeing where for some reason most progressives, and especially very senior progressives, like on the Senate side, for example, as well as on the House side, have just not embraced at all some of the progressive narratives around crypto. And then the few of them that did felt embarrassed when then they saw like someone that they were close to that entire, the FTX collapse was not helpful. I think it was Representative Himes who mentioned on an Atlantic Council session that basically the introduction for crypto to Congress, and especially to a Democratic Congress, was exactly the wrong way to do it, including Facebook at the time, now Meta, and Mark Zuckerberg being involved in the Libra project, and the vitriol that was either fairly or unfairly pointed towards them on that project. And then with the FTX issue, it created this horrible opportunity for polarization on the Republican side, feeling that the Democrats are trying to crush this entire sector and technology, and by doing that promote only the government-only surveillance tool for money. And then on the other side, feeling that the Republicans are just in the pocket of all of these companies. I'm actually hopeful that a few Democrats did support the market structure bill that made it out of House Financial Services Committee.
Just to add one thing on the CBDCs too, it shares the same problem that crypto has, which is that there just isn't a clear enough use case argument in the U.S. So the risks, it's this could be a government surveillance tool. That's something people can understand, whereas I don't think people can really understand why we would need one other than basically FOMO, like a lot of other countries have it, which I don't know if that's compelling enough to get it through.
All right, you mentioned a lot of the bills that are in Congress right now. You have the market structure bill, I think the stablecoin bill. Let's gaze into the crystal ball and read the tea leaves. Do any of those bills stand a chance of passage anytime soon? Carole, I'll toss that to you.
Depends on your definition of soon. By I think anyone who's here, you're probably, what is likely a reasonable definition of soon is likely not going to be met. It's a personal perspective that I just don't see feasibly how to get any of this legislation through Congress in a split Congress, and with this election cycle that's coming up next year, I just don't think there's a lot of incentives on either side, and not enough good nuanced dialogue and conversation to get the support on the Senate side from Senate Dems that you need for the bills that you did get from some House Dems out of the market structure bill. I do think that the next Congress will be able to pick up both of these issues and will deliver on this legislation. They'll have to pick it up. I have every hope that that's going to happen. I'm just not terribly optimistic that legislation is what's going to move in the next 2 years. So instead, I'm hoping that the executive branch might be able to levy some opportunities for clarity and frameworks for registration that could help the U.S. Regulatory framework.
Yeah, I'd agree with that. I mean, we were just talking about this last night. For a while, a stablecoin bill looked like the lowest hanging fruit in the U.S. Everyone was saying this will certainly get passed soon, and then even that has gotten mired in political debate. So that was supposed to be the easy one, and still haven't been able to pass that.
All right, so global industry, global technology. Let's play this out a couple years, right? Let's say there's another bull run. Let's say there's more interest in these technologies and these assets. Is this going to be one framework wins all to regulate this global system? Or will there be sort of a multitude of approaches that work for different slices of the crypto economy? Say, zoom out 2-3 years, how do you see this jurisdictional race playing out in Asia, in Europe, in the US? What are your thoughts, Emily?
Yeah, so I would say that there's never going to be kind of a universal framework as long as both the US and China exist, because if you look at the internet, for example, it's these are two totally different frameworks, right? So China, I think it's pretty unlikely that China's ever going to fully allow, full retail crypto trading. So as long as the US and China remain major players, we're going to have different approaches to crypto. But I do think that the jurisdictions that will win will be the ones with clearer regulations, because I think maybe in the past there was some romance of a gray area, but as we're seeing now in the US with all the SEC lawsuits, there's no romance there, because just because it's gray doesn't mean that it's okay, right? So basically what happens is you could end up spending years and millions of dollars fighting in court, which we've seen with Ripple and we're seeing with Coinbase. So I do think that the countries that sort of win, or the countries that attract talent, will be the clearer jurisdictions.
Yeah, I'll echo Emily's comments. I totally agree that the ones that win are going to be the ones that have clear, good, strong frameworks. That the idea that crypto-friendly does not mean failing to mitigate money laundering and terrorism financing risk, but that friendly means providing like what those proper controls are that make you a safe and sound business, provide necessary consumer and investor protections to build their trust in your ecosystem, and then impose through enforcement of those and prioritizing that enforcement against the most egregious actors. So I actually, in my hopeful view, we will see more enforcement, not just in the US, but with other countries that implement frameworks. Again, I know enforcement is not everyone's favorite word, but I think it's needed critically in this ecosystem against the bad actors who give your sector a bad name. You deserve to be rewarded by the bad actors being taken out of your ecosystem and penalized for it. And it will also help send a good message about expectations for compliance. I also think that over the next few years, the critical points of nuance that are going to be really recognized in this space are going to be around DeFi, and where regulators having to figure out how to deal with, okay, if activity is not happening at the application layer and we continue to move away from application-dependent uses, then do you move accountability via self-regulation and imposed controls at the network layer, end user, protocol layer? I think that self-regulation and industry-driven standards are going to be critical. Also, looking at where activity that is financial in one use case and non-financial in another, we demand a greater level of privacy in information and internet activity than we do in financial activity. That's an example of where we're going to have to figure out as regulators how to balance those two issues of financial and non.
Tech crypto and financial crypto, that's a whole nother discussion that we could have. Well, I really love this. Carole, Emily, thank you so much. Join me in thanking our great speakers. We hope you're having a great day here at KBW, and we will see you later. Thanks so much. Bye.